This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hi, this is Ryan Koory, the Director of Economics with Mercaris, here for your monthly U.S. organic commodity market update. Starting off, it's starting to turn into spring, and we're starting to look at field days, and we're starting to look at winter crop emergence. By and large, things look pretty dry relative to where we've been in the past, even here in the Midwest, and particularly if you look out towards the west. Looking at the High Plains region, up in the upper High Plains, North Dakota, South Dakota, into Nebraska, maybe even down into as far as Colorado and Wyoming, Utah, we're looking at some pretty significant dryness. We're actually looking about the driest it's been probably since at least 2014, 2015. I know we do have some rain on the horizon, and so hopefully that'll help abate a little bit of that, but we're definitely starting off the year a little bit drier than we would like. And sticking with that theme of dryness, if we look a little bit further south, down in the southwest, looking at areas like California, Arizona, Nevada, New Mexico, and we're looking at some significant dryness, some drought levels that are very high. And really, whenever we look at those regions, we're kind of talking about two major crops. We grow a fair amount of organic desert durum in that region, and then there's a fair amount of organic pasture that's in that area as well. A lot of that's for organic dairy. When we talk about desert durum, we're talking about largely irrigated areas, so the drought may not have an immediate impact on that. But as we start to look past where we are right now, and we think about what water supply might be once we get a little bit further into this year and what it needs might be for irrigation in general over that area, we might start to see things pinch a little bit. The reports in terms of snowpack across the Rockies have been exceedingly wonderful this year. I think it's been about normal, but not fantastic. And again, we're starting off with such a dry position that we could see a situation in which we just have high water needs in general. So when we look at this dry weather pattern we're seeing across the United States, particularly towards the west, it's a situation in which it's not having substantial impacts on crops yet. But if we see this pattern persist, through the rest of the spring, if we look back in April and May and we don't see the situation start to improve, then this starts to become concerning. We could start to see some impact on organic wheat production in particular, but also some of your small grains and peas and lentils. Another major topic of discussion has been U.S. organic import patterns, particularly looking at organic soy and really organic soybean meal. There's been a lot of discussion around trade issues, particularly with India and the recent decision of the NOP to remove the equivalency agreement between the NOP and the APEDA. But even with that decision, we really still haven't seen much impact yet in terms of the pace of U.S. organic soybean meal imports. If we look at the month of February, we're looking at about 37,000 metric tons that were imported of organic soybean meal, the majority of which was sourced from India. And that's up about 54% year over year. And if we look at really this marketing year to date, September through February, we're looking at somewhere close to 233,000 metric tons of soybean meal imports, which is up about 88% year over year. So even though there have been issues reported and the NOP has taken some actions that could lead to some tightness within this market, it's not something that's begun to be reflected in the data yet. So far, those organic soy and soy meal imports actually seem to be remaining pretty robust.
So Ryan, just a couple clarifications on that India equivalency agreement, which we talked a little bit about last month. Can you just walk through, I know there's been a little bit of I'm not sure what the right word to use there is, but just confusion over exactly how that's going to work, and it's led to a little bit of concern about how is soybean meal going to get in? Is there going to be a shortage? What's it going to do for prices? So can you clarify a little bit on exactly where it's at and maybe some of the impacts that it may have on the market?
So right now, the U.S. organic soy market, there's a few different factors that are kind of occurring at the same time that are causing some turmoil. And it's definitely worth taking a second to kind of untangle them. So the first and probably the most talked about is, as I've already mentioned, the action taken by the NOP against the APEDA in India. And what that is specifically is it ended the equivalency agreement between the two agencies. The majority of U.S. organic imports from India were sourced under that equivalency agreement. And so with the ending of that equivalency agreement, in effect, the agents in India who were shipping organic goods to the United States have lost their organic certification. Now, that loss of certification comes with a bit of a caveat. And what that is, under the terms of this loss of equivalency, if you are within India and you've lost your certification, you have until July 12th of this year to apply for recertification under the NOP. And so long as you apply for recertification by July 12th, you have until almost August of next year to complete that certification. So in effect, if you are an agent in India who's lost your certification, you have not lost U.S. access to U.S. markets at all. And you will not lose U.S. market access until July 12th at the soonest, and that's if you don't begin the recertification process. So the action taken by the NOP actually isn't causing any immediate impact to the U.S. markets. Now, where this issue is getting a little more complicated is it's occurring at the same time that within India, the APEDA is actually cracking down on their own country and their own organic certification. And under that, they've removed the organic certification for a lot of farms and a lot of processors. It's a bit challenging to know exactly to what extent the action by the ADEPA is limiting supply, because there isn't a lot of good public information, a lot of good transparency in terms of just how many farms are covered or who's covered or how many people have lost that certification. But we do know from conversations that we've had and from some price signals that we've seen that people are having a challenge getting soybean meal out of India at the moment. Even though we're not seeing it show up in the trade data, I've had conversations and I've spoken to folks who are definitely having issues sourcing meal from that country. Another thing that's kind of occurring at the same time is we're also, it's been pretty well reported, there are issues in terms of getting container space. And so you have this NOP action occurring at the same time that the ADEPA is cracking down domestically, while container space is difficult to access. And it's really the confluence of those three things that are causing difficulty for U.S. producers or U.S. purchasers to import organic soy products from India.
So exactly what kind of impact is that having on prices in the short run here, and what could it do in the long run?
Yeah, prices have been a little bit crazy in the U.S. markets. With our market survey, we've seen some contracts come in at $27 per bushel delivered or higher. At the same time, we continue to see contracts come in at $20 to $21 per bushel. So what we're seeing in terms of prices is it really kind of depends on what position you're contracting in. If you're in a position where you're trying to make spot, supplies, and we're reliant on imports maybe to fill that gap. It's becoming very difficult to access supplies, and that's definitely adding upward pressure to prices. I was speaking with a gentleman earlier this month, and he mentioned that he had seen organic soybean meal contracts go at $1,300 a short ton. And we've seen soybean contracts go from $27 to $29 per short ton. At the same time, overall, the average delivered price for this first half of March has only been about $20.50 for organic feed grade soybeans delivered to the Corn Belt. So it really kind of depends on what position you are in as a contractor. We're seeing both really high prices and prices that are kind of in line with where we've seen them really for the past year and a half almost now. So moving on from talking about soybeans and looking at organic corn, what we've seen really the first quarter of this year and coming out of last harvest is delivered prices have continued to improve. Over the first 2 weeks of March, the 2-week period ending March 6th, we saw delivered prices for organic corn delivered to U.S. organic Corn Belt elevators come in at about $8 rather and 15 cents per bushel, which is up at about 80 cents per bushel from the start of February. And this is really positive news. If we think back to how we started this marketing year, coming out of last summer, a lot of people entered harvest in long positions, and with that, we really saw prices struggle. We saw prices around the September period somewhere between $6 and $6.50 per bushel. So to see them back up around the $8 per bushel ranges, it's good to see. One of the things, though, that we've seen as a factor with prices coming back up to about $8 per bushel is the pace of imports has been really reduced so far this year. If we look at really total U.S. organic corn imports, looking at cracked corn and whole corn combined, through February of this marketing year, we're only at about 101,000 metric tons rather, which is down about 47% year over year. So with those lower prices, we saw the pace of imports drop off, and we've seen the market tighten up now. We're starting to see prices come up. One little bit of caution that I might throw out there is we are starting to enter the time of year where imports are generally higher, particularly for cracked corn. It's usually over the second, third quarter of the calendar year that we see those imports rise. And with $8 corn now back in the market, it makes those imports more competitive. And so, my 2 cents on kind of where this puts the balance of the market is, I don't know that we're going to see this come in necessarily in the near future and put up some downward pressure on prices, but it's probably going to limit any kind of real upward pressure. We may be sitting at somewhere around an $7.50 to $8 cap on organic feed grade corn prices as we look at the next several months, particularly if we do see that pace of imports pick up along seasonal lines.
Now, more long term, Ryan, with corn imports coming down, I assume that means a lot of those needs are being met with domestic corn, and we're starting to get to the point where that coin might flip, where right now we're meeting a lot of our needs for organic corn with imports, but with the rate of growth, which you can touch on that exactly just as a reference, maybe what growth last year was in acreages. At what point do we start looking at the flip side of this, where imports may turn into exports of domestic corn and impact the market that way? Yeah.
So coming back around to that acreage number you asked about, we estimate that this past fall we harvested somewhere around 344,000 acres of organic grain corn within the United States, which was up about 8,000 acres rather, or about 3% year over year. Looking at where we are in terms of our supply position, what's interesting is with this reduced pace of imports that we've seen, we did a bit of analysis at the start of this month, basically looking at the pace of imports so far this year and looking at our supply position and where we think imports will go over the remainder of the marketing year. And what we came up with is the perspective that by the close of this marketing year, we're likely to have imported, or we expect we'll probably have imported about 17% of our organic corn needs, which is down pretty remarkably from last year. Looking at the 1920 marketing year, we imported somewhere around 29% of our organic corn needs. And if we look back as far as the 16-17 marketing year, that number was closer to 42%. So with that number dropping down to 17%, it's heartening, right? We're sourcing more of our organic needs domestically, and we're becoming less reliant on imports. Another way of thinking about that 17%, though, is what that means is we imported somewhere around 60 to 70,000 acres of organic corn this year. Or another way that you can think about that is if we only produced about 70,000 more acres of organic corn, we wouldn't have needed imports this year. But what that also means is we only need about 70,000 more acres of organic corn before we have to start considering other things within the market. Once we are no longer such a heavy importer and we become domestically self-sufficient, then it's a short period after that that we start thinking about, okay, well, what do we do when we produce more corn than we need domestically? And we start thinking about things like larger carryover stocks in the organic industry, and we start concerning ourselves with things like exports. And these aren't things that the organic industry has a lot of experience in, particularly in the field crops, because for such a long period we have been so reliant on imports. But given the growth of U.S. production and the fact that we do continue to close this import gap, it's a reality that's likely to be on our doorstep within the next 5 to 10 years. It's not something that we're probably going to see this next marketing year or the next. But if you're thinking about your organic operation, whether you're a grain buyer or a grain producer, it's worth thinking strategically about how to address the organic market, especially organic corn, once we do reach this tipping point and we do close this import gap and we have to start worrying about things like exports and carryover stocks.
Absolutely, and that I know it's 5 years out, and definitely a lot of the talk around the corn market right now is what are prices, especially after the last couple of months and seeing what conventional and non-GMO pricing has done, like we talked last month. But don't want to take the eye off the ball and look further down the road. That definitely for good grain buyers, good grain marketers is something to keep an eye on, and certainly wanted to bring it up and really appreciate the knowledge. And it's something that we'll be continuing to watch because 5 years will come upon us much faster than we ever anticipated, right?
Absolutely.
So with that, I think we'll wrap it up here, and appreciate taking the time today, Ryan, and we'll be back next month with the next organic market update for April, and thanks for listening to the March one. Thanks, Ryan.